Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And good morning, listeners. Welcome back to Tax Insight here on 1240 Radio, WOMT 107.9, and streaming online anytime at WOMTradio.com. We're talking with Jeff from Hawkins Ash this morning. Jeff, good morning, sir.
Good morning, Terry.
Cryptocurrency. I know this is something that we talked about a long time ago, but it's an interesting and a very relevant topic right now in today's culture. And so we thought that we would talk about cryptocurrency here on the program.
Yeah, not only is it very popular, but you know something is on the IRS radar when they actually put a question on the tax return to remind people to report any kind of gains or losses on those transactions. And that's what they did with cryptocurrency. So beginning last year, the IRS started asking a question on the first page of the 1040, no less, right there in the front, to see if any taxpayer sold, sent, exchanged, or otherwise acquired any kind of interest in virtual currency. So it's important to the IRS.
Right. Now, virtual currency, cryptocurrency, this has really exploded recently.
It has. And, everything from Bitcoin, which a lot of people have heard of, to, I think, it's relatively new. I think it's called Dodgecoin, which was, I think it was started actually as a joke.
Yes.
And now it's taking hold. And this thing, Terry, has gone up like 8,100% since it started. But, like anything that has a market price, joke or not, it's considered to be property. And there is, general tax principles do apply to this.
So if I remember correctly, this is taxed at a capital gain, correct?
That's right. For most taxpayers, that's correct. Any gains from the purchase and sale of cryptocurrency would be listed as short or long-term gain or loss. And, it would be long-term if it was held for a year or more. Now, there are still those few individuals that are actually mining these things to create brand new virtual currency. Mm-hmm. In that case, that's ordinary income.
So do taxes work like any other sale of a security or a stock when it comes to cryptocurrency?
Yes. So if you're a simple buyer and seller, then your gain is relatively easy to calculate. The gain or loss is calculated on the difference between what you paid for it and what you sold it for.
So what if you use a virtual currency to actually go out and purchase items, right? Is there any tax consequence to doing something like this?
Yeah, it's kind of interesting because, there's going to be a time, and it might even be now, that you can actually buy cars or other things with cryptocurrency.
Right.
And, in that case, there actually is a tax consequence for purchasing items using, virtual currency. In this case, you would pay a tax on the difference between what you purchased that virtual currency for and the fair market value that you ultimately had at the time when you purchased the item.
So I guess that makes sense, but it seems foreign, right? Since you don't normally pay a tax when you buy something.
Yeah, that's right. So normally when you're buying something, you're using regular currency like cash or credit cards. In this case, what you paid for the cash, let's say a dollar bill, is the same thing you're giving up, that same dollar. But in the case of virtual currency, you bought something at one price, it probably went up in value, and then you used it to buy something. And that increase in value actually enriched you. And the IRS says that if you get enriched on a transaction, you have to pay tax on that. So yeah, it seems kind of weird, but it's different than paying with cash.
So what about trading one virtual currency, cryptocurrency, for another? Would someone need to pay tax on something like that?
They would, because that's what's called the LikeKind Exchange. And unless it's real estate for real estate, you can't postpone a gain by buying like property like you used to do in the past. So if you decide to, essentially trade one cryptocurrency for another, that will result in a gain or loss.
So, Jeff, there's a lot of things here that we could continue talking about cryptocurrency. I suspect maybe next week we'll continue this topic because it's a very interesting conversation right now.
It is, and we've really just kind of touched the surface. Next week we can talk about maybe other questions that you have, and then also maybe look at it from a business point of view.
Absolutely. Jeff, how do listeners connect with the team and the experts at Hawkins Ash?
I would go to our website, which is hawkinsashcpas.com, or follow us on Twitter or like us on Facebook.
Jeff, we'll talk to you next week here on Tax Insight on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.